Just stay on. We're going to talk about the FMCG space as well. Now, because of the Russia-Ukraine conflict, prices of all commodities have been trending higher. In fact, palm oil and agri commodities are now near record highs. And as we know, crude is also at a multi-year high. This has caused a big spike in input costs for FMCG companies. So what could that translate into? Abneesh Roy, the Executive Director, Institutional Equities at Edelweiss Securities, is with us. Abneesh, tough times for the industry as a whole, but you tell us which are the companies that would get impacted the most and that you would be a bit cautious on right now?
Yeah, definitely. These are challenging times. We expect in Q1, most of the FMCG companies, paint companies to take 3 to 5% price hike. Q4, the quarter in which we are, in fact, will be a bit different. It will be a quarter of lowest gross margin compression, YOY basis, because most companies had taken price hike and there was some stability in the raw material, which currently in the last 15 days has again reversed. So Q4 is not much of a problem. And there is a lag effect before raw material starts impacting. 1 to 2 months of lag is there. So Q1, I expect all companies to take anywhere from 3 to 5% high if this situation remains. We have seen crude oil cool off from the peak level in the last 4-5 days by around 20%. That is a good development. But as you rightly said, these are very volatile times. How we see, we'll prefer clearly diversified companies, home and personal care companies. There the impact is a bit lower. Food companies, definitely, as of now, the risk is higher because wheat could also be very inflationary. Indian government is looking at more wheat exports, and international wheat prices, domestic wheat prices have also shot up. But the fresh wheat crop will come. It will come in the next few weeks and till May. So we'll get to know that then. Sunflower and all edible oil has been hugely inflationary. So we'll prefer food company lower in terms of pecking order. And that's why our top picks will be Asian Paints, Hindustan Unilever, and also Dabur. We also like Colgate based on yesterday's development, very interesting development. The new MD, Prabha Narasimhan, I think can do a lot of changes in Colgate. So that stock is looking interesting. Coming back to why we are choosing Asian Paints, actually clearly more diversified company, market share gains will definitely happen for Hindustan Unilever. Market share gains are at a decadal high, and in 75% of the portfolio, they are gaining market share. So that is something which is clearly there. Small companies, this will be very tough. They will go into sidelines because they are not able to manage such high volatility in raw material, plus they don't have enough pricing power. So yes, tough times, but most of the stocks are already cooled off 20-25% because of the relentless FII selling and also concerns on margins and rural slowdown. Rural slowdown, we expect that to continue till Q1 at least.
You said your topic was Asian Paints. Just a quick response to the data. If you take a look at the last 9 months compared to the previous 9 months, actually 2-year CAGR, profit and EBITDA growth is 0 for Asian Paints. I'm just saying that is there a demand, kind of a bit of a demand issue as well, which maybe is getting priced in because the stock is off the highs by quite a bit. And of course, now with raw material prices spiking, will there be more demand destruction?
So there are two things. Initially, Asian Paints was very reluctant to take price hike because they thought that the raw material which has moved up, it is more of a short term, which got quickly reversed in Q3. If you remember in November and December, they took very, very sharp price hike. Never in the history they had taken 15% price hike in 2 tranches they had taken. And that's why if you see Q4 margins for Asian Paint will be better than the Q3 and obviously much better than the Q2, both at the gross and EBITDA margin level. So that's an important thing. So that picture you don't get fully correct when you just see a 9-month, because initially first 2 quarters, they were a bit reluctant to take pricing. Second, of course, is they're a diversified company. So they do have a lot of the putty, distemper, construction chemicals, which is a lower margin business, but they get very good growth, volume growth there. And waterproofing is a very attractive segment. So from here on, titanium dioxide, which is a key raw material, has got nothing to do with crude oil. So if you see Asian Paints raw material, only 40% is linked to crude and 60% has got nothing to do. Yes, logistics cost can go up because of the crude oil. But in the overall scheme of things, if you see, only 40% of the painting cost is linked to paints, 60% is the manpower cost. So even if Asian Paint increases by say 10%, actual increase is 10% into 40%, it's only a 4% hike. So customer is not going to cut back dramatically in the mid and upper end. in the lower end, some down trading can happen. So I think in FY23, they will take in first quarter further 4 to 5% hike. All paint companies should take. This is our expectation.
Okay, yeah. Well, pre-open, by the way, settled 66 points lower on Nifty and 140 points lower on the Bank Nifty. So a bit of a secular decline. Abneesh, good morning. Do you track Jubilant Foodworks? Your thoughts on the kind of decline that we've seen here?
Yes, I do track, and we have a buy, and we like the company from a structural perspective. Last 2 years, because of the in-home consumption doing well, they have gained because of that. Now what's happening is they're expanding their stores significantly, both in existing areas and new areas. In existing areas, whenever a QSR adds stores, the SSG does get impacted. So what you need to track there is what is the growth coming from that micro geography or in that city rather than SSG. So some investors have been concerned because Jubilant Foods has stopped sharing SSG data in this quarter and possibly in the near term. But ultimately, we have to track what is the total market share in pizza. Obviously, they are dominating. Now they're playing multiple other consumption items like biryani, Chinese, etc. So I will say, yes, they will also face this concern of food inflation. So obviously, wheat and all this edible oil and chicken price have also gone up. So currently, every consumer company, including Domino's, Jubilant, will have a gross margin concern, and then they'll have to take on pricing definitely. So good stock and definitely very strong market share gains they will continue to see, and very high potential to add stores. But currently, it's a high FI ownership stock, and that's why that pressure has been there. Plus, there is a near-term gross margin concern also, which they will address gradually.
Quick comment before we let you go on Colgate. I heard you briefly mention that you like the new MD and CEO and the fact that there's someone from outside that has come in. But, you know, would you want to wait to understand what her strategies are? Because Colgate has sort of entered into a low growth phase as well, right?
So, yes, you're absolutely right. Prabha was handling almost 30% of the business in Unilever. So, it's very large business she was handling. And obviously, Unilever is a CEO factory for not just FMCG, for other consumer-facing sectors. Yes, so we will need clarity on two things. One is Colgate decides that only oral care they want to focus. So more aggression on naturals and more aggression on the smart toothbrush, on the premium toothbrush, and reduce aggression further in Palmolive. So that could be one strategy. Second could be, can I increase my pie by also focusing on Palmolive? But that will mean sacrificing EBITDA margins in the near term because ad spends will go up. So we need to see. In Godrej Consumer, that's what has happened. The new CEO, Sudhir Sitapati, said that I will focus on my core rather than doing the new product launches. So that's why if you see their growth rates has been a bit lower, because if you focus on a larger pie, you can definitely get a bit more growth, but your EBITDA margins in the near term could be at risk. Anyway, Prabha joins from September 1. So we do have almost 5 months where there is almost no MD after April 15. And of course, after September 1 only, Prabha can be the MD. So those are the concerns. But yes, I do see a lot of low-hanging fruits in Colgate for Prabha to address in terms of much higher aggression in the marketplace, much higher focus on the naturals, and definitely Palmolive also. She has got much more inputs to give to the company.
Okay, Abneesh, we'll leave it there today. Thanks a lot for joining us. Let's do one thing now. Let's take the 910 call then.